Hi, good morning. My name is Jim Rapond with Coldwell Banker Danforth. I'm a real estate broker here in Seattle, and welcome to Seattle Real Estate Chat. Today, I'm joined with Reid Coy, who is my disclosure. He's my niece's husband. I guess that's a nephew-in-law. Always have a hard time with those relationship things. But anyway, Reid is a insurance broker, and we're going to be talking about property insurance, specifically home buyers and their situations when they're getting new insurance. Reid, thanks so much for joining us, and why don't you introduce yourself?
Hey, good morning, Jim. Thanks for having me.
Well, your volume's a little high. If you could lower it about to a third of that.
Well, that's always a challenge. So
Okay. All right. Well, go ahead, and
I'll
maybe
pull
we can
back.
adjust later. Okay.
Well, again, appreciate having me on, Jim. So I'm an insurance broker, with Payne West Insurance. We're not an insurance company. Being a brokerage, we represent and are appointed with dozens and dozens of carriers. And so that allows us to shop the insurance that we need and really meet the needs of our clients rather than being captive agent. I was a captive agent with one of the big three carriers for many, many years, and switched over to brokerage here recently, and glad to have a lot more choices for my clients.
Yeah, that does sound like the best of all worlds. I find that's very true in the mortgage industry too. When I'm working with a mortgage broker or a loan originator who has a variety of sources, they are able to tailor the best product for the client. When the client has some specific non-conforming need, they don't have to try to fit them into a box that they don't fit into. So I can definitely see the advantage of that.
Yeah, it works out great because not every customer fits, the little box that the insurance company wants to put them in. Sometimes they've got bruises and scars that they don't like, and we've got to have choices so we can move them around and find them the carrier that best fits their needs.
So today, Reid, I wanted to kind of delve into this. We were at a family event over in Wenatchee a few weeks ago, and we started talking about when homeowners or new home buyers go to get insurance. And I always tell them, you need to get a binder here. You're going to probably want to whoever you've been working with in your insurance in the past, because they're probably your go-to person. And I don't give them much other advice in that because it's not my field. But in our discussion a few weeks ago, you kind of enlightened me as to some of the issues that they might run into that maybe I need to help steer them to make sure they get these things proactively addressed before they actually, go down the path of buying a home, like a pre-approval letter is for a homeowner.
Right. Yeah, I'm always frustrated when I get a binder, either through my fax or through my email, and it's for a closing that's just a few days away, and they're all in a rush to get it. And I'm frustrated by that because the process of insurance is not just, let me just hammer out some keys on my thing here for a homeowner's policy and shoot it back over to you. Insurance agents are supposed to physically inspect every home that they insure. And so if we're doing our job correctly, we need to get out there and take some pictures and make sure the home qualifies to be insured by the carriers that we represent. And so we're looking for the physical conditions of the home, which would be the condition of the roof, the condition of the paint and siding, if there's broken windows. But in addition to that, we're looking for some other things that you might not expect that could create a problem for your closing. Liability risks are one of the things that the insurance carrier is looking for. And so if there were things like, abandoned appliances, or, maybe your client is trying to do a refinance but he's got an old, car that he's working on. It's on blocks in his front driveway. The insurance carrier is going to have a problem with that because that creates a liability risk. Somebody could get hurt around that, and there's an insurance claim. So there's a lot of different things that could prevent a house from being insurable. So what I'd like to recommend to realtors and mortgage lenders and buyers is don't wait to get your insurance. Get that handled earlier than later. Give yourself, as much time as you can. As soon as you make an offer, you need to be in touch with your insurance broker to say, hey, I need to insure this home. Let's start that process. so that we can get out there and make sure that we don't slow down your closing because of an insurance-related problem. Some of the other things that you might look for, or that a mortgage lender or a realtor wouldn't expect, is that if your buyer has a couple of pre-existing homeowners claims, it might exclude them from qualification with many carriers. It's like saying, I want auto insurance, but I've got a ton of speeding tickets, and some carriers will tell you, well, we won't insure you because you're too high of a risk. So,
yeah, that's something I've never really thought about when telling people to get the insurance. I always assumed that it's really completely based on the property. I just haven't really thought that through. But of course, that makes total sense that you're looking at it from both perspectives, the property itself and the person that you're insuring it for. So I'm not really surprised when you say that, but it's not something I would know unless it came up in the loan pre-approval process that, hey, they had some kind of a claim or something against them, or had made a claim or something that was and somehow slowing down or lowering their credit score for their loan. So yeah, those are good points. I wanted to also ask you a little bit about situations I run into a lot here in Seattle. By the way, Reid is both in Boise and Seattle. He's licensed in Washington and Idaho, so you can work with him in either place, but he lives in Boise. But
Oregon, I'm all over the Northwest.
Okay, all over the Northwest then. I didn't even realize that. So, but the thing I run into often here in Seattle is a lot of people run a business out of their home. They usually don't have a lot of clients. They're often computer programmers or consultants or that kind of thing. But they're also concerned about making sure that the business aspect of their liability is covered. Is that something that needs like a separate policy, or is that just a rider? How does that work?
It depends. It depends on what we're talking about. So some examples of where a homeowner's policy might cover your liability risk, and maybe you wouldn't need more, maybe you would. Maybe you're a CPA working out of your home. You want to disclose that to your insurance carrier, because if you've got people coming into your home, that creates a risk for you. If they have a trip and fall accident, get injured on property, the insurance company wants to know and wants to rate for that extra risk. It's not expensive. So I don't want people to avoid it because they think, oh, it's going to, make my insurance really expensive. It's really a minor increase in the rate, but it's properly rated, and it ensures that you're going to have a covered claim versus maybe a not covered claim because you didn't disclose, you had a commercial operation operating out of your house. So, my daughter's a piano teacher. And so she's got students coming to our house 15 times a week. So that creates a lot of extra traffic and a lot of extra risk for the insurance company, because it's not just the student, it's their mom, and sometimes they've got siblings. And so you can imagine that kind of creates more traffic in the house and therefore some more risk for the insurance company. So you just want to disclose that. And it doesn't matter if you're a renter or a homeowner, you need to disclose that so that you have that risk covered. It's going to be a real minor amount of premium that they're going to add to it just to account for that extra risk. And since you've disclosed it, you'll never have a problem with any kind of claim. So so you've got two coverages on the homeowner's policy that will cover those risks. One is guest medical, and the other one is liability. So guest medical will cover any guest's injuries on your home, regardless of fault. So they could just trip and fall on their own feet because they're clumsy and hit their head and be injured. You might have $5,000 of coverage on your homeowner's policy that you can help pay for an ambulance ride, or, a kid slides down your stairs and breaks his arms, because that's what kids do on stairs, right?
Right.
So, but the liability on your policy will cover for things that you would have to actually be at fault for their injuries. So, a mutual relative of ours, Pat, was at a house party in Seattle, and there was a second-story deck, and there were a bunch of people out on the second-story deck. And because of the manner in which the homeowner maintained that deck, it caused it to collapse, and there were a lot of injuries. And so in that situation, both the guest medical and the liability would pay out because it was some fault of the homeowner. So in order for liability to pay out, you have to have some fault. So
Hmm.
So if you're having any kind of a home business, it's hard to answer that question with a static answer because there's so many variables. You know, if you're a mechanic repairing cars out of your garage or a separate shop on your property, you know,
Mhm.
that probably requires a separate policy because there's a lot of coverage there that comes in just besides liability. You know, you're taking possession of somebody else's property. It's in your care and custody. And if the car gets stolen, now it's your liability. So
Hmm.
your homeowners is not going to cover that. You need a garage risk policy for that. But you know, a CPA probably needs extra coverage just besides liability. He probably needs some professional liability coverage because if he messes up somebody's taxes and they have a financial consequence of his professional error, he needs professional liability, and a homeowner's liability is not going to cover professional liability. So,
Hmm. Right.
my answer to that is just talk to your insurance agent. Don't be your own agent trying to buy it online because um, you know, when you're your own agent, whether they say an attorney who represents himself as the fool for a client.
Right. Right.
Really similar to insurance. It's really a complex thing, and I really don't advise you to do yourself. Find a professional who will sit down with you and go through these things with you.
Okay. So, and then the other thing I was going to ask you about that we get a lot in Seattle is concerns about uh, earthquake insurance.
Mm-hmm.
Um, we get a lot of people that want to have it, but they say, I just can't afford it. Sorry, if you've got your speakers on, if you could turn those down a little, that'd be good. At any rate, I know that some carriers just stopped doing it. I think it was, and you probably know, I think it was PIMCO during our last Nisqually earthquake of 1993 or whenever that was, kind of a minor quake, but big for Seattle.
Yep.
And they had a lot of liability because they had covered, you know, regionally a lot of places and it hit them hard. And so I think they stopped doing it, if I remember right, and maybe one or two others. But people
Yeah,
want it.
I was a captive agent with farmers, and farmers stopped writing earthquake insurance. So, again, that's the advantage of buying your insurance from a broker, not a captive agent. Um, as a broker, there's going to be many sources that I have to get earthquake insurance. Some carriers will still bundle it within the home policy because the homeowner's policy itself will not cover earthquake and it won't cover flood either. And there's a lot of areas in Seattle where flood insurance might be important. And I think a lot of times people think that they have to be in a low-lying area where water can rise up to them, and that's how they interpret flood insurance. But flood insurance will cover you for all kinds of earth movement related to highly saturated ground. There's areas of Magnolia, you know, that will shed off, and that could be covered by earthquake insurance, or not earthquake, but the flood insurance.
So that's a great question, actually, a segue there I wanted to ask you about, because flood insurance I always think of as being water. And in Magnolia, you're absolutely right. The Bluff area is well known for having lots of landslides. Now, of course, the landslides technically are often caused by water saturation. And I wonder, and you know, if I was getting ready to buy a home there, I would be wondering if my insurance is going to really cover me. Are they going to say, well, yeah, there was a landslide, but it was a flood, really, and we're not going to cover it because we've got landslide insurance and not flood insurance? Or you get flood insurance and say, well, yeah, but it was really a landslide, it wasn't a flood, and
Right.
try to sneak out of actually covering you when you need it. Is that something that people should be concerned about?
Well, it really goes to understanding the policy contract you have with the carrier you're with. I have some great carriers that I write with that their policy will cover both flood and earth movement, and it's all defined right in the policy contract. And it's a policy that's specific to high net worth people, homes that have $1 million reconstruction cost and higher, which isn't hard to get to in the Seattle area at all. And especially in that Magnolia area, you know,
Yeah.
it's more expensive areas. And so it's really, you have to understand the policy contract. And again, that's having a good broker that really understands the carriers that he represents so that they can place you with the carrier with the right policy for the home that you have. You know, another good example might be You live on the backside of a hill, and there's plenty of that in the Seattle area. Um, and the ground gets oversaturated and has a mudslide that moves into your house, that would be covered by flood insurance. So we have several carriers that we can write with for flood insurance, for earthquake insurance as well. Volcanic eruption, how's that covered by your policy? I mean, those are all possibilities in that area.
Okay, well, we've covered a lot today, but we're almost out of time. I just wanted to check with you if you had thought of any tips that homeowners might want to think about that they might not normally think about when they're getting ready to buy a home and they're rushing to do all this stuff, and going to the agent early to get the binder and get the information early. That's a big plus. But is there anything else that they should be thinking of that you think a lot of people just miss? It's not on their radar, but it should be.
Well, a couple things. So many people want to buy their insurance one time and set it and forget it. And the problem is that it's a dynamic and changing world. We're dealing with things like Uber, which is completely changing auto insurance. And are you covered or are you not covered when you're driving an Uber? Homeowners costs and reconstruction costs are changing. And so if you bought your policy 20 years ago and you haven't reviewed it, you are grossly underinsured if you have an agent that doesn't review that policy with you on a regular basis. And so I would say, insurance is an important, it's protecting your life net worth and savings and the things that you have in value. And so some things about insurance, if you're doing a recent or going to be making a purchase, credit is a big thing now. So your credit worthiness is going to also define your insurance rate, because they've tied, people with low credit tend to be more claim filing. So the small little things happen, and they're more likely to file a claim. So if you have good credit, you're going to get a better rate than you will if you have bad credit. And so you might qualify to buy a home, but that doesn't necessarily mean you have the best credit score. And so one of my frustrations sometimes is that mortgage lenders, they'll always just use the same number for the cost of insurance in their estimate. And this is, again, where they can get into trouble if they wait to get the insurance. If you get that in early, they can prepare that escrow with the proper insurance amount. And my advice is when it comes to dealing with insurance and mortgage lenders, sometimes mortgage lenders just want to get it cheap so they can keep your closing costs down. Doesn't mean you're properly insured because you got it cheap. So you might have to pay $100 or $200 extra to make sure your things are properly insured and the home's properly insured and you have the liability limits you need. There's a lot of things that aren't covered on a homeowner's policy that might be very important to you, like jewelry and guns and furs and artwork. You paid $5,000 for a piece of Dale Chihuly art glass. Is not going to be covered under your homeowner's policy unless you put a special endorsement on there, and those all cost money, which raise your insurance cost, which of course means when you're buying a home, it might increase your closing costs. But the other thing you could do is wait to put those on until after closing, get the closing done, and then come sit down with your insurance broker and then make those adjustments and changes to the policy, because it doesn't set it once and forget it. It's a constantly and dynamic thing that we can adjust and change as needed. So,
good advice. Good advice. Okay, well, as usual, it's 20 minutes just flew by. Reid, I want to thank you so much for joining us today. Rhonda couldn't make it, but she'll be in here next time. And we may do this again sometime in the near future. I think there's other areas related to insurance that probably we don't think through as much as we should when talking about new purchases of homes. And you're an expert in this, so it'd be great to have you back. Thanks again for coming. Reid, where can people connect with you if they want to talk to you about their insurance needs?
Payne West Insurance, PAYNEWEST.com, and just look me up in the agent directory there. We've got 33 offices around the Northwest. My phone number is 208-424-2934. Look me up on Facebook, Reid Coy Agency. That's REIDCOY Agency. And just connect with me on Facebook as well. So there's a few ways you can connect with me.
Okay, great. Well, everybody, I hope you got some value here, and we will post this with the replay section if you didn't make it live. And we may do some little enhancing to see if we can clean up some of the audio. We apologize for that. Sometimes these things don't go as technically smooth as we think they will. But hopefully this went good enough to where everything was clear and you could understand everything. Thanks, everybody. Have a great day. See you again. Bye.
Thanks, Jim.
Bye.